So a new investor who goes in says, oh, I'm going to be a diligent investor. I'm going to look at the balance sheet. $27 billion wouldn't even show up. So you wouldn't even know, which is scary. So I don't know where it all comes out. I don't know when it's all going to collapse, but it's going to be an overbuild. It's all going to collapse. It's going to be ugly. And a lot of people are going to get really hurt, and leveraged ETFs are going to go to zero.
Graham Stephan calls out the possibility of another market crash on its way to wipe away billions of dollars, only to be left stunned by his guest giving the brutal reality of just how bad it's going to be. So like and subscribe as we follow financial distress and how to get out of it. Now let's check it out.
What do you think is the biggest risk to the economy right now that no one's talking about?
It's that credit. That's it.
So explain this like I'm 5.
Because Jack is 5.
Yes.
Basically.
Explain it like to Jack.
A lot of debt that so people owing other people money, and we don't know if those people are going to be around in the next 5 or 10 years. Whether those are data centers, people who are building out, H100 NVIDIA facilities or data centers, or they are construction companies that are building these and rapidly expanding their debt so they can hire people to build out. Whether they're generator selling companies, whether it's, not Generac, but there are plenty of other even private companies that are trying to build out data centers, and everybody's trying to expand quickly. So people are taking on debt to facilitate data center construction. Somewhere that's all going to go to crap one day when that cycle turns.
So how are you?
Yeah, folks, it is absolutely insane. I see data center signs all over my town. My town, the one over, if you go back the other way, yeah, they got signs, in people's front yards. It's crazy. And look, I don't want them around me either. Like, this is like the new gold rush. Everyone put their money into AI, having no idea how this was going to work out, how it was going to function as a business model. They just had to be first. That was the only goal, without knowing anything on the other side, is everybody just had to be first. And now you got all these data centers getting built. And I've seen stuff now that they're talking about where instead of the data centers, they're going to use, if you want to, your infrastructure. So they got this device that they put on the back of your house by the AC compressor, and they link that up to help cool it. And it's like 16 graphics processors, 4 regular like Intel processors. And basically they use your infrastructure, how you're wired into the grid. They pay you for the electricity that it uses, and you get like free internet. But then they use that to actually function, because that's the bottleneck that I keep seeing that everyone talk about, at least I do, is they're building all this stuff, but it's not built out to get to everyone. Like, there's a gridlock, and the more people you have on it, the more costly this gets. So it's not even like you're saving money. Like the business model, like I said, they didn't know how this was going to function. So now they're trying to get away from these data centers. What was it? NVIDIA just released a chip that you can buy, that you can put in your own computer, to where you can run all your own AI in your own house. So you wouldn't even need the data center. It's like the scale of innovation is happening so fast, all the while they're building these things that by the time they're done, a lot of these may even be obsolete. So, like how this is all going to play, it's going to be a monumental crash. I don't know how exactly you would short the market, but I don't see how there's any way but like a gaping bottom to all of this, because there's going to be a few who win and a whole bunch who lose out, because there's only so many eyeballs and so many ways to use all this stuff, not to mention all the electricity and water it uses.
So sure of that?
I'm not. That's the toughest part, is I don't know where the credit cycle will be. I think it'll be in data centers, but it could be in somewhere else. Somewhere.
So what you're assuming probably will happen, because we will always need data centers, but there will be a few winners, a lot of losers, and these losers are going to be caught up in the credit cycle?
Well, it's typically what happens when you have an industrial boom is we overbuild. So there were like a quick comparison. If you go back to like the .com bubble, we always think of like the consumer .com bubble, like pets.com or whatever. But before that, you had the infrastructure build out boom. Dark fiber, basically. Let's lay fiber everywhere we can. I think there was a company called WorldCom and Cross Country, I don't know, whatever. Massive debt expenditures driven by spending from the big mega cap incumbents of the day. which is exactly what's happening today. Except just for scope comparison, back then, the total, like the highest annual CapEx spend was $82 billion from all of the mega cap incumbents back then. Today, NVIDIA almost makes $80 billion in a quarter. In about 100 days, NVIDIA makes about $80 billion. The top 5 data center plays, so like Google, Meta, Oracle, Microsoft, and Amazon, are projected to spend over $1 trillion in CapEx next year, which is more than 10 times what we saw in the dot-com bubble. And I think a lot of that is financed by debt. There's a reason why companies who are doing great, Google's great. There's a reason why, though, Google and Meta have stopped doing stock buybacks. If you go look at their earnings, you're like, oh, last year you guys were buying back all your stock. They do that because they issue a lot of stock comp to their people. And the people who work there are like, well, I want to buy a house or a boat. I'm going to sell some stock. So the company buys back the stock so it doesn't impact the stock price and the CEOs get yelled at or fired because the stock goes down. So they buy back stock. They've stopped doing that because they're out of money, which is crazy. If you look at Microsoft's balance sheet, it's like, what'd you guys do with all your money? It's all gone. It's crazy. The balance sheets have gone from amazing to bad. And Meta is now hiding debt from their balance sheet. They're literally able to structure, somehow legally, $27 billion lease commitments that don't show up on their balance sheets. That was a Blue Owl deal that they just did last year.
Imagine if you did that to if anybody else did that. Like if you or I had our own little private business and we're just going to keep these off. Like that was what the mob did. That's what underground criminality. So it's a crime if we do it, but if you're Facebook, somehow it's just legal. Like the obvious level of corruption in our financial system is so bad.
Doesn't show up on their balance sheet. So a new investor who goes in says, I'm going to be a diligent investor. I'm going to look at the balance sheet. $27 billion wouldn't even show up. So you wouldn't even know, which is scary. So I don't know where it all...
Wouldn't that be fraud? Like if you're investing in a company and they're hiding their debts and how much they actually own, how is that not defrauding the investor?
Comes out, I don't know when it's all going to collapse, but it's going to be an overbuild. It's all going to collapse. It's going to be ugly. And a lot of people are going to get really hurt and leveraged ETFs are going to go to zero.
I was reading, though, that a lot of those aren't really going to impact the broader market. That if you're in the S&P 500, you're going to have very little to worry about outside of a few deals that seem to be isolated.
That's the hope. The biggest thing that concerns me about the economy outside of credit is the labor market. The labor market drives everything. There's a reason why retail sales are still booming right now, which is crazy that they are, but they just keep beating estimates. Even with oil prices, 50%? Well, actually, we're almost double the oil prices per barrel that we had in January, which is also crazy. But despite that, people are still spending more than economists have been expecting. And that's even excluding oil and gas.
All driven by the top 1%. Predominantly.
Yeah, okay.
Maybe 80% of that spending is like the 1% because the stock market is so high. And it's an annoyance to go and fill up your gas tank and pay $7, but you don't care.
This is true. There is a massive, massive wealth effect. People are feeling rich because the stock market is at all-time highs. And so that'll actually bring me to my point. And you're right. Yeah, the top 1% has a big spending. Top 10% has a big spending. Top half spends almost all of it, right? The bottom half doesn't matter so much for spending, which is sad. But the point is, that's what drives the economy. The consumer's still 72% of the economy. That'll start flipping because of AI. But what's really interesting is when people lose their jobs, then they stop spending. And so that's what makes me the most scared, is that once we see that slowdown, we don't know when it's going to be, but once we get that construction build out slow, all these great jobs reports we're getting, they're not going to have that support anymore from construction or from software developers getting hired. Ironically, even in the age of AI, we're seeing more software developers get hired now.
And here's my prediction.
That's because AI still has limitations. Like I've played around with AI a lot myself. I mean, it still has problems understanding directions, reading a clock, doing very specific things. Like if you wanted to just kind of like move something a little bit or make something just a slight off in color or, in detail in a certain way, it's the finer stuff that it still doesn't do because it doesn't actually understand. It's just guessing at what you're saying. So the more that they implement it, the more that they find out that they still need people involved in reviewing the process, making sure it's doing what's doing. It can do the bulk stuff. It can do a lot of simple stuff in mass. But at the end of the day, I mean, sometimes you'll put something and it'll take it out, put something else in. I've had a guy try and write some code with it, and it just did all sorts of crazy stuff on it. Like, there's still limitations, and it still needs quality control. It still needs overview. So at the end of the day, the more it's implemented, you're going to need more people back on in order to make sure the thing is doing everything the way it's supposed to be doing it. And that's kind of the crux that they're finding with widening the implementation of it, at least that I see.
Stock market's going to keep going higher and higher and higher and higher. And people are going to keep saying it's a bubble, it's a bubble, it's a bubble. And then there's going to be a point where they're going to say, I was wrong. It's not a bubble. And they're going to buy.
And that's when you sell.
And that's the moment you got to click sell, is when all the doubters say, I can't keep doing this any longer. I'm back in.
But they'll never do that.
They will.
Michael Burry will. I just don't think that.
I think there will get to a point where the majority of people out there who've been sitting on cash say, "Fuck, I've lost so much in opportunity cost. I've been wrong. I'm going to buy it."
So, what do you think then for the average person? Because this is one of Graham's favorite things.
Yes,
is having what we call dry powder.
Oh, yeah.
So having a good amount of cash, like you said, your portfolio is what, 15% cash, 20% cash.
Well, it's not cash; it's treasuries.
Yeah, cash. So he has 20% cash, treasuries,
a stabilized asset,
cash equivalents.
There you go. Do you think that this is a reasonable approach for most people? Like, what percentage cash or dry powder, treasuries, cash equivalents should they have set on the side to purchase in the case something happens? Like, we have another like geopolitical crash.
I think that's great. I'm a big fan. I think a lot of people could benefit from that, because what it means is, first of all, if you have cash on the sidelines, you probably don't have a lot of margin. It depends on what kind of structuring or deals you're getting, but margin rates for most people are very high right now. And so if you have cash on the side, there's a good chance you're not borrowing against your stock, in which case you don't have pressure to sell. And if the market goes down, the market goes down. It doesn't matter. You have that opportunity to buy. And psychologically, when people are buying when the market's going down, it kills that feeling of fear of, oh crap, it's going down, I'm losing all this money. You're buying. If you're buying, you're psychologically seeing it as an opportunity, which is great because you're increasing your ownership. Like, I always see it as ownership. With any stock. If you if you have a favorite company or you want NVIDIA, the stock price is at 150 during the geopolitical crisis. Great. I was able to buy more ownership of that company at a lower price. It's great. DCAN.
So then how is your net worth divided up? What does your portfolio look like in the middle of 2026?
Well, there's a good amount of treasuries, cash equivalents. Love that. I'm a really big fan of that right now.
What percentage cash equivalent?
A lot of my net worth is in house hack, in reinvest. And I don't really know what the daily value of that is because it's a private company. There's one value based on what we recently raised at. Then there's a value based on what we're about to raise at, probably in like September. And then there are also stock options. So that's a big skew. But let me put it in comparison to history. In comparison to history, I've got probably 4 times as much cash than I've ever had before now. And I feel great about it. No debt too, which feels great. So I think that's probably the easiest comparison.
Wouldn't that be the dream if everybody could just quadruple their cash and get rid of all their debt?
Viral clip from our podcast that occurred recently of Kevin O'Leary saying you're not truly wealthy until you have $5 million of cash liquid available to you at any given moment. Yeah. What do you think about that?
Yeah, I think that's great because now you're sitting around with true, like, just FU money, basically. It doesn't really matter if the car needs a $10,000 repair or the house needs a new roof or whatever.
I mean, I always see guys when they talk about living off money to like the point that you don't like, you really have FU money, at least 5, if not 10 million. I'll see it people, or even less. But at that point, if you even took $1 million and you invest in something that got you at least 5% back, that's 50,000 a year. At that point, if anything happens, yeah, you can just sit and like exist. But if you wanted to grow, I mean, if you had 5 million, all of that's invested, mutual funds, something like that. I mean, just multiply that 5%. What's 5% of that? Now you're at $250,000. I mean, if you're getting $250,000 to do nothing, that at that point you have financial freedom. It's like it doesn't matter if you get fired. It doesn't matter if something happens. Like you're fine. And then if you can take that as cash and just have that sitting on the sidelines, boy, that'd be a dream.
If you've got 5 in cash sitting around, those are all just rounding errors, right? That's a wonderful place to live in, but that's not for everybody, right? Kevin O'Leary's talking about the top 1% or maybe even a fraction within the top 1%. So it's not relatable. And so he honestly, I haven't seen the clip, but he probably gets a lot of flack for that. But that's kind of what keeps Kevin O'Leary really relevant, because he says these things that people go crazy over. He's really good at clips. I think that's why like Fox loves having him on, the clip man.
A lot of people actually agreed with him. Like if you went into the responses, a lot of like wealthy people were like, I actually 100% agree with this.
Totally.
Which I was blown away by. I thought he was going to get a lot of hate for saying
I honestly thought he was going to get hate too, but I also agreed with him. So that's interesting.
Yeah, it's one thing I've never understood. Like if you won the lottery or something like that, you got $1 million, you got 5, you got 10. Look, you just need something solid and safe to invest that in. Just put the whole thing in there and then you're fine. Sit back, chill, enjoy the ride. I mean, as long as you don't develop some sort of terrible gambling or drug habit or something like that, like you should be otherwise good. But as long as you don't take the whole pot every year that you take it or live off of, it's going to keep growing, and then you're going to keep getting little by little. So at that point, if it got you, I don't know, 5% back, if you could live off half that, cool, take the half, and then every year it keeps getting bigger and bigger and bigger, and your share will grow and grow and grow, and then you just got a perfect nest egg that you can live off of. And at any point, you're still sitting on that whole principle that you could cash in if you ever actually need to. Like that, to me, that's like living life on easy mode. But let me know down below if you agree with Graham Stephan that there's a crash upcoming, and if so, how do you plan to make money off it? So thanks for watching. Like, subscribe, take care, and I'll see you on the next one.